So, what happened to those post-halving fireworks everyone was expecting in 2025? They've pretty much fizzled out. Bitcoin's treading water, altcoins are bleeding, and you can practically taste the fear in the air. The headlines are screaming that the bull run is over. But before you even think about hitting that sell button, you need to see what the data is showing, because this doesn't look like a decline. It looks like the setup for the next big move. Let's be real, the sentiment right now is brutal. After months of chopping sideways, that explosive rally we all banked on after the 2024 halving just hasn't shown up. Instead, we're watching Bitcoin struggle to hold its ground while major altcoins get hammered. The crypto fear and greed index has taken a nosedive into extreme fear, with some scenarios pointing to readings in the low double digits. It feels like the party's over before it even started, and the urge to just cut your losses is stronger than ever. I get it. The anxiety is real. When your portfolio is red day after day, and the mainstream narrative is screaming that the top is in, it's tough not to panic. But reacting to that emotion is what separates the winners from everyone else. Today, we're cutting through the noise. We're going to look at what's happening under the hood, because I don't see a market about to crash and burn. I see a market in a deep, necessary, and ultimately healthy consolidation. This isn't the end. It's the market catching its breath before the next sprint higher. First, let's not downplay the bearish signals. They're obvious and they are everywhere. The biggest headache is Bitcoin's price action. A year after the 2024 halving, its performance has felt much weaker than the explosive gains seen in previous cycles. For instance, picture a scenario from mid-December 2025, where Bitcoin is struggling to stay above key support levels, with heavy selling pressure kicking in every time it flirts with the $95,000 to $100,000 range. Some analysts are even flagging a potential drop toward an $80,000 support level, which would definitely shake out more investors. This sluggishness, especially after a halving event that historically kicks off bull runs, is the number one reason fear is in the driver's seat. Then, you've got the altcoin situation, which for many looks even worse. While Bitcoin chops sideways, many altcoins have been bleeding out against it. This is a classic risk-off move, where investors dump their more speculative bets and flee to the relative safety of Bitcoin. Pouring salt in the wound is the constant threat of massive token unlocks, flooding the market with new supply and pushing prices down even further. And finally, there's the macroeconomic storm. Unlike past cycles, crypto is now deeply tied to the decisions of central banks like the Fed. Any uncertainty around interest rate cuts or hawkish talk from the Federal Reserve can put a damper on risk assets everywhere, and that includes crypto. When money is tight, speculative markets have a hard time taking off. Put it all together, and it's easy to see why so many people are convinced a new bear market is here. But this is the moment where we need to take a breath and zoom out. After acknowledging all those fears, consider this. What if this slow, frustrating grind isn't a sign of weakness, but a sign of maturity? The entire structure of this cycle has been different from the start. And if you're using the 2017 or 2021 playbook, you're reading the map upside down. The game changer was the spot Bitcoin ETFs in the US. They were a massive catalyst that likely pulled a huge amount of demand forward. Demand that normally would have arrived after the halving. This institutional flood helped Bitcoin break its previous all-time high before the halving, something that had never happened before. This changes everything. The halving wasn't the starting gun for the bull run, it happened in a market that was already digesting huge gains. So, what does that mean? It means this consolidation we're in isn't the beginning of a crash. It's the market's way of building a new, higher floor after a rally that started way ahead of schedule. Let's look at the signs. We've seen Bitcoin's dominance climb and hold strong, recently hovering in the mid-50% range. In times of uncertainty, capital flows back to Bitcoin, cementing its place as the digital reserve asset. This isn't what happens in a true market nuke where everything sells off together. It's a strategic retreat to quality within the crypto asset class. And while performance has been more muted than in past cycles, Bitcoin's price 1 year post-halving would still be up significantly from where it was on halving day in April 2024. The market has absorbed the ETF hype, weathered a tough macro environment, and is now building a new, higher trading range. This looks less like a market rolling over and more like a maturing asset finding its place on the global stage. Navigating a choppy market like this is tough, It tests your patience and your conviction. If you want my real-time analysis, personal trades, and to join a community of serious investors focused on data, not drama, I highly encourage you to subscribe to my weekly newsletter. It's where I share my most in-depth thoughts and actionable insights you won't find anywhere else. The link is right there in the description. So, if this isn't a decline but a consolidation, what's the play? This is where patience becomes your superpower. Panicked sellers are simply providing a discount for smart money to accumulate. The first opportunity is in the trading range itself. We can see a hypothetical scenario where strong support forms in the low $80,000 while major resistance sits near $100,000. For traders, that's a clear playground, but for long-term investors, this could be a prime accumulation zone. The thesis is that institutional money will use these dips to build their positions, not abandon them. We've already seen ETF inflows tick up on major price drops in the past, and that pattern is likely to continue. The second area to watch is the tug-of-war between Bitcoin and altcoins. With high Bitcoin dominance, the market is telling us it's not altcoin season yet. This means two things. First, chasing small-cap moonshots right now is like playing with fire. Second, when the market sentiment finally does shift, the rotation of money from Bitcoin into major altcoins could be absolutely massive. A sustained drop in Bitcoin dominance might just be the starting pistol for the next phase of the bull run. Finally, the biggest opportunity is to keep an eye on the macro catalysts. The next major leg up will likely be triggered by a shift in global monetary policy, when the Federal Reserve pivots and signals more aggressive rate cuts. It will pump liquidity back into the system and reignite the market's appetite for risk. That's the fuel we're missing right now. The smart move isn't to guess the exact date, but to be in position before the engine starts. This consolidation phase is your chance to get ready. So, is the crypto market on the decline? My take is no. What we're seeing isn't a death spiral into a bear market, but a long and necessary consolidation. The ETF approvals fundamentally changed the timeline of this cycle, pulling the rally forward. The chop and fear we feel now are just the market digesting those early gains while wrestling with a tough economy. But under all that fear, the foundation is getting stronger. Bitcoin's dominance is firm, institutional players appear to be buying the dips, and the network is as strong as ever. The overwhelming extreme fear sentiment is historically a contrarian indicator. It often signals the point of maximum opportunity for those who can stay rational. This isn't the time to panic. It's the time to be patient, be strategic, and understand the bigger picture. This phase is shaking out the speculators and allowing long-term believers to build their positions. The headlines are driven by emotion. The story of consolidation is told by the data. Focus on the data.